Hello crypto enthusiast, I know it's been a while, glad to be back. Today, we're diving into an intriguing debate that's been stirring up the financial world: stocks versus cryptocurrencies. We're going to break down the 10 key differences between these two investment avenues and hopefully provide some clarity on their unique characteristics. But remember, this is not financial advice. It's crucial that you do your own research and make informed decisions based on your personal financial situation and risk tolerance. We're just here to provide some food for thought and spark some interesting discussions. From ownership and regulation to volatility and potential for profit, we'll cover it all. So buckle up and prepare to navigate the fascinating, often complex world of finance. Now let's dive into the world of stocks and crypto and uncover their key differences. Our first key difference is about ownership. Let's break it down. When you buy a stock, you're essentially buying a piece of a company. You become a shareholder, which means you have a claim to a part of that company's assets and earnings. Stock ownership is tangible. It's a piece of paper that says, hey, you own a slice of this business. On the other hand, when you buy cryptocurrencies, you're acquiring digital assets. These are not physical, and they certainly don't come with a piece of paper. Instead, you get a digital token or coin. What you own is a cryptographic key, a string of numbers and letters that allows you to access and move your digital assets around in the virtual world. So when you buy a stock, you're buying a share of a company. But when you buy crypto, you're buying a digital asset. Next up, we have regulation. Now, when it comes to stocks, they're under a watchful eye. Government bodies like the Securities and Exchange Commission in the United States have stringent rules and regulations in place to protect investors and maintain fair markets. This oversight ensures transparency, accountability, and can even provide investors with a sense of security. On the flip side, cryptocurrencies largely operate in unregulated spaces. There's no central authority overseeing Bitcoin, Ethereum, or any other digital currency. This lack of regulation can lead to increased risks, including price manipulation and fraud. However, it also allows for greater innovation and freedom within the market. It's important to remember that this regulatory landscape is always evolving. Governments around the globe are grappling with how to approach and regulate this burgeoning field. It's safe to say that the world of crypto is still like the Wild West in many ways. Let's talk about volatility now. The world of finance is riddled with ups and downs, but when it comes to cryptocurrencies, the roller coaster ride is on an entirely different level. Compared to the stock market, crypto markets are like a wild stallion, unpredictable and often dramatic in their movements. One moment you're riding high and the next you're in the depths of a bear market. It's this very volatility that makes cryptocurrencies both exciting and nerve-wracking. On one hand, it opens up opportunities for significant gains. A single tweet can send the value of a cryptocurrency skyrocketing or plummeting. On the other hand, this volatility also means that the risk of loss is significantly higher. A sudden market correction can wipe out substantial amounts of value in a matter of hours. So if you're someone who can stomach the roller coaster ride, then crypto might be for you. Now, let's move on to accessibility. One of the key distinguishing factors between cryptocurrencies and stocks is their respective accessibility. Where traditional stock markets operate within set hours, usually within a specific country's standard business hours, cryptocurrencies do not have such limitations. They can be bought and sold at any time, on any day, from anywhere in the world. It's like a global marketplace that never closes its doors. Whether it's Monday morning or Friday night, whether you're in New York or New Delhi, you can engage with the crypto market. This round-the-clock accessibility not only allows for constant trading but also accommodates for the global nature of cryptocurrencies. So, if you're someone who values the ability to trade at your own convenience, without being bound by the 9-to-5 schedule of traditional markets, cryptocurrencies might just be your cup of tea. Unlike the stock market, the crypto market never sleeps, ever. Our next point of discussion is dividends. When it comes to stocks, one of the potential benefits that often comes to mind is the opportunity to earn dividends. Dividends are a portion of a company's profits that are distributed to shareholders. This means if you own stocks, you could potentially earn a regular income in addition to any gains from the increase in the stock's value. Now let's pivot to cryptocurrencies. Unlike stocks, cryptocurrencies do not offer dividends. When you invest in crypto, your potential gains are solely dependent on the increase in the value of the coin or token. You're essentially banking on the coin's value to rise over time. There's no business behind the coin generating profits and sharing a portion of those profits with you as a holder of the coin. In conclusion, with stocks, you have a chance of earning dividends, But with crypto, there are no dividends. Let's now talk about transaction speed. When it comes to the world of stock trading, transactions are not instant. The process involves multiple parties, from brokers to exchanges, which can delay the transaction. This can sometimes take up to 2 business days for the transaction to settle. Now, let's shift gears and head into the realm of cryptocurrencies. The beauty of blockchain technology is that it allows for peer-to-peer transactions, cutting out the need for a middleman. This means transactions can be completed faster, often in a matter of minutes. Imagine you're sending money overseas. A traditional bank transfer could take several business days to complete, whereas a Bitcoin transaction could be confirmed in about 10 minutes. This transaction speed is one of the key advantages of cryptocurrencies, making them an attractive alternative for those who value speed and efficiency in their financial transactions. In the world of crypto, transactions can be completed in a matter of minutes. Next up, we have anonymity. In the world of stocks, your transactions are anything but private. They're recorded, monitored, and available to authorities. This transparency might seem like a good thing, but it can also feel like an invasion of privacy for some. Now, let's turn our attention to the world of cryptocurrencies. Here, anonymity takes center stage. When you transact with cryptocurrencies, your identity remains hidden. You're known only by your digital address, a string of random numbers and letters. This level of anonymity is appealing to many, offering a sense of privacy in an increasingly transparent world. However, it's worth noting that this anonymity can also be a double-edged sword, potentially facilitating illicit activities. But as with every innovation, it's not the tool itself but how it's used that matters. When it comes to privacy, crypto has the upper hand. Now let's discuss entry barriers. The world of investing can seem daunting, especially when you're just starting out. Traditionally, entering the stock market required significant amounts of capital. This can pose a considerable hurdle for many individuals looking to grow their wealth. By comparison, cryptocurrencies have brought a seismic shift to this landscape. You see, the entry barrier to cryptocurrency investment is arguably lower than that of stocks. Why is that, you may ask? It's because cryptocurrencies can be bought in fractions. This means that you don't need thousands of dollars to start. You can start investing with as little as a few bucks. This is a game changer for many individuals who are looking to dip their toes into the investment world, but may not have hefty sums of money to start with. So if you're looking for a low-cost entry point into investing, crypto might be the way to go. Last but not least, let's talk about the potential for profit. Both stocks and cryptocurrencies hold considerable promise when it comes to financial gains. Stocks have made millionaires and billionaires out of ordinary people, and the same can be said of cryptocurrencies. Bitcoin, Ethereum, and other digital currencies have created a new class of crypto-rich individuals seemingly overnight. But it's not just about the upside. It's important to remember that with high potential for profit comes a high potential for loss. Stocks can plummet due to a variety of factors, from poor earnings reports to broader economic downturns. Cryptocurrencies, on the other hand, are known for their volatility, which can lead to significant losses in a short amount of time. So, while the allure of quick riches can be tempting, it's crucial to approach both investment avenues with caution and a well-researched strategy. Whether you choose to invest in stocks or crypto, remember that high reward often comes with high risk. Well, there you have it, folks. We've journeyed together through the 10 key differences between stocks and cryptocurrencies. We've examined how ownership in these two arenas varies and how regulation, or the lack of it, shapes the landscape. We've delved into the intense volatility of cryptos compared to the more stable nature of stocks, and how accessibility and transaction speed differ greatly between the two. We've also looked at the concept of dividends in stocks, and how this doesn't apply in the same way in the crypto world. The importance of anonymity and the low entry barrier in cryptocurrencies were also highlighted, contrasting with the often more complex stock market. Lastly, we explored the potential for profit in both spaces, each with its own unique opportunities and risks. Remember, we're not financial advisors, so always do your own research before diving into either stocks or cryptocurrencies. Thanks for watching. Be sure to like, comment, and subscribe. And hit the bell notification so you'll get updates anytime we upload a new video.